Hello everybody and welcome again. Another day, another dollar. This is what we are going to try and do today. How are you? How's everybody? I really hope you guys had a good day yesterday. It was a boring day actually. Let me just say hi to you guys. Hi, how are you? Yesterday, unfortunately, it was a boring day, very boring day. We had 10 orders, guys. We placed 10 orders on 5 instruments, 5 long, 5 short, and none of them was triggered. Not one was triggered. So we did nothing yesterday. We just saw the market move up 10 pips, down 10 pips, and that was it. It was a boring day, of course. A part of that, or maybe the main reason for that, is Thanksgiving, of course. And sometimes in these holidays, trading tend to be extremely boring in extremely limited ranges. But what can we do? It's a part of what we do. The Forex market is open. It did not close, not 1 second. Yet, you know, the supply and demand during these holidays, especially when there's a public holiday in one of the biggest countries in the world from an economic and financial perspective, of course, you can expect the market to be boring, and it was extremely boring yesterday. So I want to welcome you all, and I want to thank our sponsor, of course, QTimeFX, our favorite Forex broker in the whole world. Guys, a reminder, this live stream is sponsored by QTimeFX. It is the broker who is offering you a 500 to 1 maximum leverage, the broker who got the award for the lowest Forex spread broker of 2018, which is something impressive, really. It is really, really impressive, but it was no surprise. It was no surprise to see QTimeFX get this award, because they are offering you guys fantastic spreads. They are offering unbelievable spreads. Imagine yourself trading with 0.4 of a pip on the euro, dollar, and the dollar yen, and imagine yourself trading these fantastic spreads with 0 commission, guys. And that is absolutely fantastic. Now, the current promotion that we have is the bonus promotion. You know, it's very, very successful. Everybody's talking about it. Everybody's asking us about this bonus thing. And what we have for you is that you can get up to $500 in bonus. $500, guys, in real American dollars. Not trading credit, real withdrawable American dollars, guys. So you can make a deposit of $150 and get a bonus of $250, or a deposit of $300 and be entitled to a bonus of $500. Of course, you can withdraw equity equal to $1.50 per lot traded, and once you get the amount of lots that is required, then of course you can withdraw your bonus. And we want you to withdraw your bonus. We want you to enjoy it. We want you to go and spend it on anything you like at all, and say to yourself, hey, I got these $500 because I picked the right broker, because I made the right decision of trading with QTimeFX. But one very important note, guys, to get these promotional benefits, you must contact us at FX_Educast via Telegram. Okay, so this is the link. This is the gate that you must go through in order to get these promotional benefits. Remember this name, guys, FX_Educast via Telegram, and you will get everything in this promotional offer, especially the bonus. Of course, everybody is interested in these dollars because they are free, and we are humans. We love free stuff. So, without wasting a lot of time, let me just update the chart, the chat. chat link. Let me update it. Yes, it is working. Now we can go to our charts. And today, guys, because of some reasons, we are probably going to spend 2 hours together, and then I'm gonna wish you a very good weekend, and with that comes with a promise to see you on Monday. Okay, people, let's do this. Euro. First of all, we're going to talk about the euro. Of course, not a lot of change here. Why is that? Well, that is because we are not trading. We're not moving. We're not going up. We're not going down. We're just, trading in the same areas day after day. And this is getting really, really boring. So what we need to see, of course, there's no change. When you see something trade in the same areas without breaking any important levels, then of course it will be very hard to change your mind and to look for other levels. We are still depending on 109.88 as a support, of course, just like yesterday. And the resistance will be provided by the falling trend line from Monday high. And this line is currently running only pips above current market around 10.15. So I'm gonna use this, the 10.15, as my resistance for the day. This is the first piece of information I'm gonna leave on the chart for you guys. 10.15 support will continue to be where it was, 109.88. From an Elliott point of view, this is the beginning of this bullish wave count, of course, and that is why it's very important. So here we do have a rising five-wave sequence pointing to the upside, but what made it a little bit confusing is that we do have a 5-wave sequence to the downside. And of course, we have evidence inside these waves to support this wave count. For example, this flat here at 4 in the place of wave 4 of 3. A flat in wave 4 is always a big possibility. And the internal structure of wave 3 that is falling to the downside also, that is another evidence that this wave count is correct. So, guys, we are not 100% on one side or the other from a technical Elliott wave principle point of view. So if you want to go to the Elliott part of the analysis and you want to see what it's saying to you, then it is saying we have 5 to the upside, 5 to the downside, and that happens only when we have a 5-wave termination and the beginning of an A wave, because wave 5 and wave A both have 5 waves inside them, or subwaves. So we're not gonna depend a lot on this wave count. What we are going to depend on is, of course, the support at 109.88, this bottom here. We have many reasons to believe that it's important. It's very close to the 109.95 Fibonacci level. It's a very, very important Fibonacci level, which of course proved to us that it's important in the past with this bottom here. We were expecting a test of 109.95. The price dropped to 109.88, only 7 pips below that, and then recovered more than 100 pips. This is an indication that 109.88 is important. Now, that's why 109.88 is our support. Our resistance is this falling trend line. Maybe once we start trading about this trend line, things will get better, but it's a Friday and it's Black Friday, so I don't know if there will be a lot of action in the market today or not. You know, from my own experience, most of the time when these holidays are here, the market is boring. It moves in a limited range, very boring, but not always. You know, I have seen seriously big moves in holiday trading, but of course it's not the norm. It happens in very limited number of times. most of the time it is going to be a boring day, but let's see what happens, guys, and we'll talk about it on Monday, of course. So for the euro, we can establish a long position if we start trading above this resistance, and that means we can buy 10 pips above it, 10.25. Okay, guys, sorry about that. So target or limit to the upside. Of course, I'm going to give you a very modest target as an initial target, and after that we are going to aim for something more, and for that I'm going to use this top here, the top of wave 2 in 3, which is 68, as my initial target. But my second target, as yesterday, it will continue to be the top seen last month at 1183. Color this in blue. And you got yourself a signal or recommendation. Which one do you prefer? Do you prefer to call it signal or recommendation? Okay. So now the sell, of course, is going to be reverse. 968. If we get 20 pips below 109.88, I'm willing to short the euro. I don't want to short it now, but if we get there, I am going to short it. Our stop is 10.25, of course. Our limit is at 0903, and we have of course talked about this level many times, and another limit at 814. So these are the recommendations. They are almost exactly the same from yesterday. Why? Because of course the market did not move much. It did not break any levels. It did not add to the technical knowledge or the technical outlook that we had 24 hours ago, and because of that there is absolutely zero reason to change our mind about these levels. If we start trading above this falling trend line, we want to be long. If we start trading below this bottom here, we want to be short. Very simple techniques. This is from yesterday, and look at this, it is exactly the same as today. I'm going to delete this from yesterday. These are the recommendations for today, guys. So before I go to my QTimeFX account and I'll show you while I'm placing these orders, what I want to show you is the orders from yesterday, guys. Let me just show you. I have them here on file, and I will show you the orders we placed yesterday. It was a zero trading day. We didn't do anything. Okay, guys, so this is our account from yesterday. These are the 10 orders which we placed on our live QTimeFX account. We had 2 for the euro, 2 for the pound, 2 for gold, 2 for dollar yen, and 2 for euro yen. And as you can see, one of them is always a long order, one of them is short, buy at, sell at, and we did not trigger any of these 10 orders. These are the 10 prices. None of them were touched. Can you believe that? This is how boring yesterday was. But of course, it's a part of trading. It is almost a holiday. Of course, the forex market will not close. It does not close. But it was a very, very limited trading period. So guys, as you can see, all of these trades were not triggered. We came very close to the pound here. I think we stopped a couple of pips, only a couple of pips before this short pound at 28.98. But aside from that, we did not even come close to any of these recommendations to be triggered. They were not triggered. And with that, of course, we need now to go to our QTimeFX live account, and I want to place my orders. I want to, where we're talking about the euro. Let me place my orders. It is the same order from yesterday. 10.25 with a stop at 09. We said 68, right, guys? And a limit at 10.68. And of course, we will have a short. $9.68, 10.25, and 109.03, and boom! There you go, guys. We have our orders now ready to take advantage in case the euro changes its mind and starts to move. I really hope it does. Okay, guys, so what's next? Let's move to the dollar yen. The dollar yen, these are recommendations from today. We had a long at 67, a short at 19. None of them was triggered. So what about today? Let's see. I am still interested in this moving average band. As you can see, guys, we have been finding support here. This is the hourly chart, and we have a very impressive moving average band that is providing support here, here, here. Here we came very close to it. And again, now we are trading inside it. So without the break below the bottom of this moving average band, this thing is not going down. It's not. Okay? So what we need to wait for is a break below this moving average band, the bottom of this band. If we don't get that break, we will not short the dollar yen. Just like yesterday, we believe that it can fall, but not without seeing an evidence from the price itself that this is what is going to happen. So we're going to wait for a break below the bottom of this moving average band. If we get that, we're in on a short position. If we don't sell. Okay? This is the mentality that I want you to have, guys. You react to what the market is doing. You do not force your expectations upon the market. You can try and do that. Sometimes you'll be happy, sometimes you're not. But this is a much safer way to trade, in my own opinion. For example, I believe it's going down, but it is not going down for the past few days. We are trading above 109. We are and even trading above the resistance 109.37, trying to break it. So if I had a short position, depending on my feelings or what I think the market will do, I will be in loss right now. But because I have waited for the moving average band to be penetrated before I initiate my short position, I'm in no position. I'm in no loss right now. I'm just waiting. I have no position. So I saved myself from some losses with this wise decision to wait for the market itself to give you the signal that it is moving, not to force what you think the market will do upon the market. That will not work most of the time. Okay, people. So the moving average band, the bottom of the moving average band is around 40. So I'm going to wait for a break below 40 here. That means, of course, 10 pips below that, and I am done. I am ready. So I'm gonna sell at 109.30 if we get there. Now we are trading around 50, 20 pips above that level. Now for the resistance, of course, I'm gonna wait for something like the 30 pips above. We talked about this yesterday. We said 30 pips is enough. So that's why our stop and reverse is going to be at 109.67. We got close to that twice, guys. And that, of course, adds to the feeling that we are using a good resistance. Why is that? Just check this out here. We got to 60. Again, here we got very close to 60. So these two tops are very close to each other. Our long signal will be placed immediately above these tops. The minute the price starts pushing above them, we are in. So this is 60 here. We have at 67. So it's only 7 pips above what we have been reaching recently, and 30 pips above that very important resistance 109.37, which we are now trying to break. Now to the downside, of course, we have many targets. We're going to, for example, 09, of course, it's very close. This is the 50% level for this attempt to recover, which is at 93, also not very far. And I'm going to use the next level. Maybe 61.8 would give me modest. I don't want a very large target, but I don't want it to be 37 pips here, so I'm going to use this level here, 61.8 retracement level, guys, which is 108.77. So limit or target 1 is 108.77. And since it is Black Friday, guys, and we don't expect much action, maybe giving only one target is enough. If we want to look for another target, remember from yesterday we talked about, I think, 107.67, a previous bottom. Let me check. For today, I really believe that we don't need to look or pay attention for the second target. This is the bottom I'm interested in. It is 107.87. So this is second target for now. 108.77, 107.87. We're going to use, of course, the first one. I really believe it's almost impossible to get to this level before the weekend. Now, buy. As you can see, guys, I'm placing an order to buy on an instrument that I really believe it has a very, very good chance of moving to the downside. Why is that? Because I let the market decide for me. I don't decide for the market. So if an important resistance is broken, I will give up my bearish hopes and dreams and follow the bull. And you should do too. So 109.67, our stop. As you can see, the stop is very, very small today. And that is because, of course, we are having the support and resistance very close to each other. They are very, very close to each other. So stop at 109.30. Our targets from yesterday, I remember them. Cluster Creel, target 2 at 77. Let me just check that on the chart. Okay. Okay, guys. This is the initial target, of course, guys. 1013 here, and we have 1070, I think. Yes, 70, not 77. So I'm gonna adjust these to 70, and these are the recommendations for today. Let's go to our account and place them immediately. Let's be ready to take advantage of this pair if it starts moving, because recently it has been very, very boring. If we break to the upside, we want to be long 67, stop 30, target 1013, and place. And now we have sell at 30, stop at 109.67, and $108.77, and place. So there you go, guys. Now we are positioned to take advantage of moves to the upside or to the downside on the euro dollar and the dollar yen, two of the favorite pairs for every trader out there. So with this, I'm gonna take a short break right now, because guys, today is going to be only 2 hours, so I'm gonna take the break a little bit earlier than usual, 5 minutes, and we will be back to talk about other instruments. Of course, after the break, we're going to talk about commodities, and I hope that you guys are the kind of guys who trade gold and oil, because we will be taking a look at these two instruments in the next part after the break. I'm going to take a 5. Please let me know if you want me to analyze any market at all, and I will do that with a big smile on my face. Before I go, I just want to give a huge thank you to QTimeFX, our favorite forex broker in the whole world. This live stream is sponsored by QTimeFX, who is the broker with the award for the lowest forex spread broker of 2018. And I really hope they get it for 2019 and 20 and 21 and 22 and so on, because they deserve it, guys. They are offering you fantastic spreads to trade with. Imagine yourself trading with the euro dollar with 0.4 of a pip and the dollar yen with 0.4 of a pip with no commission. That is unbelievable. That's a very, very good way to trade. And you don't have to worry about your funds, because they are segregated with UOB, which is ranked in the 22nd place in the World Bank ranking. 22nd place in the whole world, guys. That is something very impressive. Now you can open a VIP account with QTimeFX with a minimum deposit of $150 and get yourself up to $500 in bonus. You can make a deposit of $150 and get $250, or make a deposit of $300 and be entitled to get yourself $500. But to get these promotional benefits, you must contact us at FX_Decast via Telegram. So please do contact us through this account in order not to miss any of these promotional benefits. When you do contact us, you're going to find a very friendly, very professional team ready to help you, ready to answer all of your questions, and help you in the account opening process in case you do need that help. We are willing to do anything to make a good trader, a successful trader out of you guys, because you have chosen us, QTimeFX, and we want to reward that with bonus, with very tight spreads, with educational webinars, with free signals and recommendations, because we want you to be successful. So guys, we'll take a 5 now. Thank you very much, QTimeFX, for this sponsorship, and we will be back. Okay, people, we are back after this short break. Welcome again to the second part of today's webinar, where we are trying to spot the best opportunities in the market just for you. Before the break, we have talked about the euro and the dollar yen, and we have issued some recommendations, of course. Now we are going to talk about the precious metal and see what it is expected to do for what is left of today trading. Of course, remember, guys, since this is Black Friday, then the markets will close earlier than usual. So check with your broker to make sure at what time gold will stop trading today. It's not going to be like every Friday. It's going to terminate a few hours earlier. So, guys, we have been talking about a drop, of course, a drop that went beyond expectations from 1478. We thought that this is, maximum, in my own opinion. The drop here was going to find support at or above 1460, but that is not the case. We are currently trading below 1460 with no sign of real recovery. We want to see gold move to the upside, but up until now we don't have that on the chart. And I'm gonna start looking for support and resistance immediately, guys. And I think this looks very, very interesting. Yes, I like it this way. This rising trend line from 3 days ago, a Tuesday low. If you draw it through these bottoms right here, you can see that it's currently running very close to the bottom of this moving average band there. The trend line itself is at 1455.5, and I'm going to use that as my support for today. I don't want to see gold trade below the support. Of course, the main support, we talked about this yesterday, the main support will continue to be 1446. This is main or major support. This is the bottom that saved the precious metal earlier. This bottom right here, remember, early in this month, a little more than 2 weeks ago, from which we started recovering. And this recovery, unfortunately, was unable to regain 1480. We stayed 70s, 60s, 70s, 60s for a while, and now 50s. Now we are trading 50s, 60s, 50s, 60s. So as you can see, that, of course, is an indication of weakness. I'm sure you agree with that. So that is why we don't want to be long on the precious metal in case we break below this initial support. But we're not going short. Okay, guys, there is a number of reasons why I don't recommend shorting gold here. Of course, the market can go in any direction it wants, but when you look at the chart and you see what is happening here, especially if you turn this to a daily, this is what really makes me unable and unwilling to issue short signals before breaking 1446. First of all, we have a very strong move to the upside. Then we started correcting that. We have double three, obvious double three here. This double three terminated extremely close to the Fibonacci 38.2 retracement level at 1446 with what, guys? With a positive candle on that test here. It's a very, very positive candle, very bullish here. It's a doji, almost a doji. There is a number of pips between the open and close, but hey, this is the real world. It's not a book about candles, it is the real market. So we allow for these things, for an ideal doji, of course, we want the open and close to be exactly the same, but even if we have a situation where within a candle there is a difference between the open and close, a few pips here or there will not change the outlook. So open and close here very close to each other. This is a doji at a Fibonacci level. After a double three to the downside, everything is screaming bullish. So I don't want to short the precious metal unless it breaks below the bottom from which this recovery attempt started, which is of course a Fibonacci level at the same time. It's the Fibonacci level 38.2, as you can see here. So without breaking below that, I am not going to short. I just wanted to explain myself and explain to you why even breaking below this trend line will not encourage me to sell. The overall technical outlook is good, but we need to see the market move in the direction we are expecting. And when you do have that kind of situation, you wait for signs to go along, but I need really strong signs to believe that the market is going down. Of course, that will not happen before we break below 1446. So 1446 is the main support. I'm going to hold on to that idea. Now, what about the resistance? As you can see, guys, the falling trend line from the highest price seen after testing that long-term Fibonacci level. We topped around 10 days ago here, just before 1480. The falling trend line from that top is currently running very, very close to these highs here. These highs, these are Wednesday's daily highs. The daily high on Wednesday, which was seen during just before the open of the European session, and then again during the European session, we had 60.3 here, and again 60.2 here, 60.2 here. So I'm going to use 60.2 as my resistance. And with this kind of difference, of course, between support and resistance, I can buy when the price starts trading above the resistance and place my stop, of course, below the support. But I'm not going to place a short order below this initial support. Let's see how that can translate on our trading account. So 60.2, once I start trading above that, I want to be in, and I want to be waiting too long before I get in. So I'm gonna buy at 1461.2. Only 10 pips is enough. Actually, I was thinking that even I want to buy with the first pip above 60.2, so I'm gonna place it at 60.3. My stop is going to be below 55.5 with a good number of pips. I'm gonna choose, what about 30? Let's see, 52.5. Yeah, that makes sense from a risk management point of view. Of course, we make decisions on the chart, guys, but it's not the only tool. We need to evaluate these decisions according to our risk management rules. So even if the market or the chart is telling me to place a stop at 160 pips or something like that, I'm not going to follow on that advice from a chart. I'm going to look for a smaller stop because we don't want you guys carrying that kind of risk around, okay? So don't get used to placing stops at 160, 200 pips. These things are not very good for your trading. And also at the same time, we don't want it to be very, very close, like 25 or 30 pips. We want it to be above 50, but not above 100. The ideal is, as I always say, my own personal ideal stop loss level for most instruments is between 60 and 70, something like that. So we are pretty close to that here. 78 pips, that's great, that's very good. Now let's look for some targets. Okay, if we start trading above this falling trend line, guys, then we should expect the market to correct, at least correct this falling move, this whole falling move. As you can see, we do have the 50% level at 64.3, which would leave us with 41 pips of profit, but we can still push beyond that, of course. I want to look for something just above that, and I like these bottoms here. 65.80, 65.80 again, exactly the same. So I'm going to use 65.80 as my target, which would leave me with 55 pips of profit. Yeah, for an initial target, that is what we are looking for. Now, if we continue moving to the upside, then we will challenge this top, of course. And I remember that we have a retracement just above it, just above that at 80.8. And I want to use that retracement as my target, my second target. For my order today, of course, I'm going to place it. We don't have a lot of time. It's not even until the end of the day. Gold is going to have an early close today. So we are going to use, of course, the initial target. Now, what about the short? Because it's a short trading day, and because we need to break below 1446 for a short recommendation to be valid, to be justified, then I will not issue a short recommendation for today. So this is the only recommendation I'm going to have for gold, and immediately I'm going to my QTime FX live account, and I'm gonna place my order to buy at 1460 buy stop, 1460.3. My stop is 52.5, right? And my limit is going to be at 65.8. And place. And I think, unfortunately, we are having some problems, guys, here. I'm going to restart the application. I hope that we don't have this much of an early close. Yes, gold is going to close early today, but not this early. So I'm going to close my trading. I'm going to close my and then restart it again and see. All right, so I think, guys, we have a very early close today. A very early close here at QTime FX for trading. But for for you guys who can place an order, please do place your order to buy gold at 1460.3 with a stop at 1452.5 and a limit at 1465.8. Use the initial target as your limit. We're not going to wait for this today. We're going to have a close within hours from now. So no time for that. Now let's take a look at the pound. Or before that, sorry, let's take a look at crude oil. Crude oil is also going to have an early close today, and I only analyze this without placing the orders on my trading account, just like we did yesterday. I'm sure you have noticed. We talked about it. I issued a recommendation, but I did not place these orders on my trading account. I'm going to do that for now, but maybe we're going to change that soon, and I will start placing my orders. Okay, so as said yesterday, guys, of course, we do have a bullish setup because we have a 5-wave sequence to the upside and 3 to the downside. Within the 3, We do have a triangle in wave B, which is common, and further confirms this wave count. And again, to see the ABC terminates very, very close to a Fibonacci level, that also further confirms this wave count. So that is why we believe that the market is rising from here. Now, of course, after this very good move to the upside, it was time to retrace some part of it. And now we are in the middle here. We want to know what we should do. One of the things that can be very helpful is this observation right here, guys. After dropping, we tried to overcome the Fibonacci 61.8 retracement level here at 58.23, but we're unable to do so. That's why we are going to continue waiting for a break above 58.23. I want to break this level. Once I break above this level, then that is it, guys. We can start believing that oil is going higher and higher. How about the support? So in my own opinion, of course, breaking below the bottom of the moving average band here is going to be harmful, but I'm willing to wait a little bit for this trend line. This trend line is currently running around 80. Maybe if I use a micro-term retracement calculation, that will help me understand which level exactly it is. We have 92 here, it's very important, but I want something a little bit below that. And of course, for the next few hours, currently it's here. For the next few hours, it's going to be a little bit above that, like here, for example. So I'm going to use 81 as my support while I use 23 as my resistance. So resistance at 58.23. Support is at we said 81, right, guys? 57.81. And between these two levels, I don't want to be in the market. I want to wait for a break of this or that, and then follow the direction of the break. This is my plan for this very short trading day on crude oil futures. So let's say 10 pips above resistance. That would leave us with a long at 58.33. My stop is 10 pips below support, so 57.71. Reasonable stop. I like this. For the upside, once we start trading in 30s above this Fibonacci level, a challenge to this stop here will become highly probable. So I'm going to place my target. I'm going to place one target, one limit. I'm going to place my limit. I'm not going to give you two targets, just one. Let's say 10 pips above this top, only 10 pips, just a little bit above it, 78. That would leave me with 45 pips of profit if this signal is gonna be a good one. Now the sell, of course, it's going to be a reverse. If we start trading below 57.81, we want to be short. We're going to place our stop above this Fibonacci level here, which is 23. So we're going to place the stop at 33, 58.33, and our limit or target is going to be, let's see, let me look for a target. Of course, it's going to be below this bottom. And in this case, of course, we do have this, the bottom of wave C, as a support to really care about. 57.21, 50 pips exactly. These are my recommendations for today, guys. So this is it for gold. This is it for oil. This is it for the part that we specify for commodities. We talk about commodities together now, oil and gold. I know you guys like this very much. You like these instruments a lot. I know that. A lot of people ask me about them all the time, especially gold. But I like them both. In my own personal trading, I like them both very much. They are among the instruments that I trade most, and I enjoy trading most because they are exciting. They move. No, not like that currency pair that everybody's asking me about all the time, but it does not move. I'm not going to name names, but I don't like that pair. And not because, of course, I don't like it for any personal reason. No, of course not. But I want to see action, guys. The euro dollar is becoming extremely boring. Extremely boring. And I really hope that we can overcome that time, that waste. It's actually wasted time. We are wasting our time watching the euro. We want to see some action. So maybe, I don't know, maybe the euro decides to be good to us and they start moving, giving us good trading opportunities with a potential for making some profit. Because currently it goes up 10 pips and then down 10 pips and then that's it, which is very, very boring. So guys, this is what I think about oil for today. Let's summarize. Resistance 58.23 at Fibonacci level, support 57.81, the rising trend line that you see on the chart before you, and that is why I'm going to buy above 58.23, 10 pips above that, sell 10 pips below 57.81. Our long recommendation for today: buy at 58.33, stop 57.71 with a limit at 58.78. While the short recommendation is to sell at 57.71, stop at 58.33 with a target 57.21. Okay, people, with this, I know you are feeling strange about this, but because it's a short day, we're not waiting a whole hour for the break. We are taking the break inside the hour. But before I go, I want to say hi to Gabrielle. Gabrielle is talking about our recommendations on the pound and the euro yen, enjoying them very much. Thank you very much for this comment, Gabrielle. Yeah, I like that very much. Especially the last one, the last signal that we had yesterday, we didn't trigger any of the 10 recommendations that we issued. A very boring market, did not move enough to trigger any of them. But the last signal which was triggered, yes, as you said, the long on the pound a couple of days ago on Wednesday, which made us 44 pips easily. So congrats. It seems like you are among people who used that recommendation to make some profits. So congrats to you, buddy. And let's do this again. Maybe not today because it's Black Friday and the market is already in weekend mode, not really moving a lot, but come again on Monday, Gabrielle, and I assure you I will do my absolute best to find you the best trading opportunities in the market on Monday. So with this, guys, I'm going to take a break, and after the break, of course, we're going to go back to the chart. We're going to analyze the market for this last part of today's webinar. We're going to spend around 40 pips or so together before we say goodbye, and before I wish you a great weekend ahead. Enjoy your time, enjoy your weekend, but don't go before we complete this webinar, before we talk about very exciting instruments like the pound, and we'll see if we are going to fit also the euro yen. I'm gonna analyze and take a look at these two instruments that Gabrielle just talked about, because they made our viewers happy with the recommendations we issued recently. Thank you very much for this comment, and I hope to see you after the break. I hope to see you all after the break. Before I go, guys, I want to give a huge thank you to QTimeFX, our favorite forex broker in the whole world. This live stream is sponsored by QTimeFX. Why? Because they care about you guys. They want you to make money. They want you to see the best opportunities in the market. And of course, to help you with spotting the best opportunities in the market, they asked me to come and give these sessions for you free of charge. Okay, of course, you know that this is not free. This is analysis And analysis is knowledge, and knowledge is power. And the analysis and knowledge of the market can help you achieve a lot of profit. So that is why it's not free. Anything that works is not going to be free. But QTime FX said, Munther, come and analyze the market for our clients. We love our clients. We want them to make money. Come and show them where are the best opportunities in the market. And I said, yes, of course, because I want you guys to make money. I want you to be successful, just like QTime FX wants you to be. They want you to be successful, guys. And that is why they are offering you fantastic spreads to trade with zero commission. Just take a look at the spreads on the screen right now, guys. Very, very attractive. And if you look around, of course, you're going to find that there are many brokers who offer good spreads, but most of them, the vast majority of them, will charge you commission for that service because they say, well, we are giving you fantastic spreads and we are looking for these fantastic spreads for you, so you might as well compensate us with some kind of commission. No, 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 no. Not QTime FX. They are giving you these spreads with zero commission, guys. And to make you feel good about your money, we keep your funds segregated and UOB ranked in 22nd place in the World Bank ranking. And to top that, guys, we are now having an explosive promotion and it's doing fantastic. Everybody's asking us about this promotion. Open a VIP account with QTime FX and get yourself $500 of bonus. If you make a deposit of $150 or more, you are going to get a bonus of $250. And if you make a deposit of $300 or more, you are going to get yourself a bonus of $500, guys. But to get these promotional benefits, you must contact us at FX_educast via Telegram. So again, guys, FX_educast via Telegram. You must go through this account in order to get these promotional benefits. With this, guys, I'm going to leave you for 5 minutes. Get yourself something to drink. Think about the market. Think about what markets you want me to look at. If you have any requests, please do. We're going to take a look at both the pound and the euro yen when we come back. So don't miss that because I am sure we are going to find some very good trading opportunities there. See you in 5, guys. All right, we are back. My fellow traders, my brothers and sisters in this battle to make profit. How is everybody doing? I hope you are still feeling great about the market, about trading opportunities. And guys, today, of course, we are having a short one. Only 2 hours instead of 3, so we still have one last part before we say goodbye and before I wish you a fantastic weekend. And we're going to use that part to analyze two instruments that we have been looking at a lot recently. First of which is the euro yen. The euro yen, of course, it's related to both the euro dollar and the dollar yen. And when I see opportunities on these pairs, I go to the cross rate and I check to see if the analysis I'm seeing on the cross rate goes along well with the analysis of each pair against the dollar. We had these recommendations yesterday. This is from yesterday, yeah. And they were not triggered, guys. The market moved in a limited range, of course. Now, let's see if we have a trading opportunity here or there, if we have a break that we need to care about. So I'm going to delete everything here on the chart. Support, resistance, recommendations, so we can start from scratch. First of all, I want to take a look at the indicators and the daily chart, and then of course I want to see the indicators on other time frames. First of all, let's go to the daily chart, guys. Not a lot of action here, but the direction is bullish, but no actual trading signals. Now this channel is one that I'm really interested in. Let me delete this, and even these small ones here. I just want to make sure that this is parallel. That's why I'm going to clone this trend line and move it to the upside, guys. All right. So obviously we are moving inside a rising channel, of course, but this can be corrective because we do have the shape of an ABC here. And without breaking above the top of wave C, this will continue to be counted as an ABC. We have failed to overcome the stop right here, and that is of course bearish, especially with the shape of this ABC pattern. It's very important to break above the top if the bulls want to control this market. So currently there is no reason to believe that the market is going higher depending on this wave count. So we're gonna take a look, of course, at the 4-hour and 1-hour charts, and we're gonna see the 4-hour chart also shows weakness signs like this one here, the cross of the stochastic indicator with the RSI being in the overbought, and maybe up until now it's still in this area, it's above 70, but if we see the RSI dropping below the 70 level, then that, guys, would leave us with another reason to believe that this market is going lower. So up until now I am more of a bear than a bull. What about the hourly chart? Let's see if we have anything interesting there. The only thing that can be used as a defense for the bulls is that we are finding support above the moving average. Up until now, this is the only thing that I have found on the chart to be of bullish explanation. Now, this rising trend line and these moving averages on the hourly chart are within 10 to 15 pips from each other. From the first moving average to the trend line, we have 15 pips. From the bottom of the moving average band to the trend line itself, we have something like 10 pips or so. Between this is in around 43, this is around 33. Yes, almost exactly 10 pips. And we are going to use this area as our support. So without breaking this trend line, this rising trend line, and of course in the process we will be breaking the moving average band. Without having that break, guys, there is absolutely no reason to short the euro yen, although we have weakness signs on the chart. This bottom right here is at 30. The trend line is at 33. I'm going to consider it to be at 30 at this bottom, although this bottom is a few pips below it. So first thing I want to leave on the chart for you guys is that support is at 2030. Okay, people? Now what about resistance? I think it's obvious that recently we have been finding resistance very close to the 50, between 50 and a little bit higher above the 50 level. 50, I mean 120 point, the 2050 level. So we are moving up. With the 50s we start falling. Let me show you what I mean. This is 2050. As you can see, guys, just when we start trading above that, we do see tops happening. Maybe we can fine tune this to this level right here, or even this level right here. Okay, yes, so I like this. I like this top here. It is 60. We reached the highest point was 69. So guys, 69 is the highest price. The actual resistance is at 60, but I'm going to use 69 because it's the highest price. $20.69. Now with this, of course, I can start building my trading strategy for the day. If I get a break above the resistance, then of course if I get a break above the resistance, of course I want to be long. If I get a break below the support, of course I want to be short. This is how things are going to go for today. Now let me buy 2079, stop 2020. 59 pips of stop loss, very reasonable stop, not very large, not very small. Now for the target, I'm going to give you one target, one limit for these recommendations for today. We have a bit of a short day today on some instruments, and of course we expect the market to be calm, not to move violently today. That's why maybe giving one limit is enough today. So where is this limit for this long position? once we start trading above these areas, that means we are going to be trading at the highest price for 3 weeks. This is something to keep in mind. But if we take the highest point from which this whole drop started, maybe we'll need this to do so, which is the top of what could be a C wave. Up until now, I'm convinced of this wave count. But if we start trading above the top of wave C, of course, that will mean that this wave count is no longer valid. So I want to be long at 2079. Where can I place my limit? $79. We do have 21.22. It's an important and interesting resistance. As you can see, we have previous tops here. Very close to it. It's the 88.6 retracement level, Fibonacci level, for the whole drop from the top of wave C. And we also have wave C itself as a target. For me, it's a lazy day. I prefer to use the first one, 21.22. 43 pips of profit. Yeah, that fits a day like today. Now, what about the short? Of course, what I want to be shorting is a trading below 20-30 hour support. So 2020 with a stop, of course, above 2069. 10 pips above that is enough, 2079. Now the target to the downside, or limit, let me call it. Limit is going to be, our limit is going to be, once we start trading here, we will be expecting the market, of course, to challenge this low here, which is 62. Yeah, I think that would be good. 1962. 58 pips of profit, and color it in red. And keep these recommendations here for you guys. So this is it for the dollar yen. This is what I believe is important. Pay attention to 2030 and 2069. Once you see the price pushing beyond one of them, you can follow the direction of the break. If we break above 69, go long. If we break below 2030, go short. And having them only 39 pips apart, the support and resistance are not very far from each other. That's very good, because we can watch them, we can keep our eye on these levels, and we can expect one of them to be broken in the near future. Maybe not today, maybe early next week. We'll see about that. But for now, these are our recommendations, guys. Buy at 2079, stop 2020, limit 21.22. And I love switching between 20 and 20. I don't know why, I like it. Sell 2020, stop 2079, and a limit at 1962. So this is it for the euro yen. What's next? No, it's not Bitcoin. I was preparing something on this one, a webinar about cryptocurrencies, but not in this webinar. That's for something else. So we're gonna move to the pound, and it's probably going to be the last instrument we'll be talking about. Maybe, I don't know if we have time for anything else, but I think we will cover the pound, and that will be it for today. Let's see. Yesterday we came very close to triggering the short signal. This is not from yesterday. It was, the sell signal was at 28.98. Let me look for yesterday. Yes, this is it. We got very close to this one, but we did not touch it. We stayed a couple of pips above it, that's all. By the time I came to close, or to cancel, sorry, to cancel the orders which were not triggered by the end of the European session. I noticed that the daily low on the pound is very, very close to this entry, but it was above it. So we did not have any signals yesterday. Yesterday we said that support is at 29.18. Obviously we are now trading below that. Resistance is at 29.53. Let's see if we still have the same numbers for today. The resistance, of course, it was provided by this falling trend line. Let me delete this trend line. We don't need it anymore. Now, this falling trend line from November 18th high. The falling trend line, of course, was touched several times. The last time we tried to really break it, we failed twice in the same area. This was, of course, an indication of weakness, and we saw weakness happening. Now, what I wanna do is to see if we can break below the bottom of this moving average band, and for this, of course, I need the price to start trading below this bottom right here. You see, we are already pushing below the bottom of the moving average band, only a few pips below it. This is the bottom is at 6 or 7. This low is at 28.97. So I want to see maybe 10 pips below that, and that will be enough. So 28.87 maybe. But first, let me leave this on the chart. The support for now, guys, is 28.97. What about the resistance? Of course, the resistance is this falling trend line right here, and it was in the 50s yesterday. It is in the 40s today. It's very, very close to the top of these two candles at 40. So I'm going to use 40 as my resistance for today. And I'm going to, of course, follow the break of either. If I see the price breaking above 29.40, I'm going long. If I see the price falling below 28.97, which we are very, very close to at the moment, I am going short. So my friends, let's do this. We have a buy at 29.50. I'm just thinking out loud here. I'll see if this will be a good idea, depending, of course, on the stop, on how many pips we have on the stop. Maybe we can increase the margin we need above and below these important levels before we get in the market. Now, stop is going to be 28.87. So that's 63 pips. Yeah, that's good in my opinion. Now, I'm gonna look for one target and one target only, the limit. So for a long, we are already far from that level, but in case things change and we start trading above this trend line, then we will become, of course, capable of taking stops here. That will become expected. We do have a recent high, which is at 13.30. The highest price seen recently is this one. But I'm going to cut that to the psychological level at $1.03. This is going to be my target for today. 50 pips of profit. Let's hope for that. Now, we are very, very close to the support. So maybe this signal is the one that is going to be triggered, the sell signal. We have a sell at 28.87 with a stop at 29.50 and a limit at limit is going to be, we need something like 50 pips. So immediately this 88.6 retracement level here makes a lot of sense. 28, I think we used the same one yesterday, right? 28.39, and today we're going to use it again, 28.39 as our limit, but I need to change this from blue to red. And this is it, guys. This is it for the pound on this Black Friday. We have a long order, a long recommendation at 29.50 with a stop at 28.87. And of course, we have a reverse for that. We have a sell at 28.87 with a stop at 29.50. In both cases, we are not looking for a lot of profit, modest profit of about 50 or even less than that, 48 pips in the case of the sell and 50 in the case of the buy. These are recommendations on the screen for a couple of seconds. Before we move on, it seems like we have time for yet another instrument, and I want to take a look, guys, at the dollar index. The dollar index, it's very important. We talked about this yesterday, or again in the last 10 minutes of yesterday webinar. Today we are going to talk about it also in the last 10-15 minutes of the webinar or so. So people, we are looking at the dollar index. It's very important in my own opinion. You should always look at the dollar index in case you are a currency trader, because if you are a forex trader, you cannot go a day without trading the dollar. Well, maybe you can, but most of the time you will have to trade the dollar, right, guys? Dollar yen, euro dollar, the pound against, and so on. So understanding what the dollar is going to do can be extremely, extremely helpful to you as a trader of majors in the forex market. And with that, guys, of course, we need to look at the dollar index from time to time. I really recommend that. I really recommend that you at least once a week look at the dollar index. And to me, I look at it much more often than that. We do have what looks like a 5-wave sequence to the upside, and this of course indicates dollar strength, not dollar weakness. However, we have noticed yesterday that for the second time in a row recently, we are topping in the same area. So 2 times this month we have topped almost exactly at the same high, which is 98.45. A couple of weeks ago it was 45. A couple of days ago it was 44. So it's obvious that we have something there. We have some kind of resistance. However, we are still very close to that. We're going to use 98.45 as our resistance for now, but being close to it means that not only we need to keep an eye on it, but maybe the break will come soon. On the other hand, failure to break above this level will be a reason to believe that the dollar is going to get weaker and weaker. So in my own opinion, guys, we have a lot to care about in this area. And I'm going to use indicators. Yes, I'm going to use my indicators. I'm going to go to the daily. Let me focus on the chart here. I want you to see the indicators, what they are saying. Let me use another. Okay, guys, what we are looking at here is the daily chart of the dollar index with some indicators. And one of the things that I am taking a note of here is that both the RSI and the stochastic indicators are showing some kind of weakness because we have topped here, we have dropped again, we are not unable to reach higher highs here, and again here, guys, it's the same kind of behavior. And of course, this comes with the price topping twice in the same area, which should say something. It says that this is an important resistance without a shadow of a. So guys, I cannot begin to tell you how important this is because the dollar is the base, of course. It's right there at the bottom. Everything builds on the dollar when you trade currencies. So it's very important to understand where the dollar is going. And apparently from what we are looking at right now, we do have an important resistance at 98.45. Now this resistance may dictate what is going to happen in the market for the next few weeks or maybe even more than that. It's really simple. A break above this level is needed in order for the dollar to continue achieving the gains it has been achieving recently. For example, the euro was pushed down from 114 cents earlier in the summer to 108 cents, and again the yen recovered from levels below 105 to levels above 109. So the dollar, and of course, don't forget about gold. Gold is pushed lower from the recent highs after reaching 1557, which was a multi-year high. It is now being pushed to the downside, which of course is another indication of dollar strength. So for this strength to go on, we need to see a break above 98.45 on the dollar index. If we do, guys, then this will continue. This dollar strength, which started around these levels after bottoming twice, almost exactly in the same area. Now we are topping twice, almost exactly in the same area, an indication of a reversal. Now, what about the 4-hour chart? I want to take a look at the indicators before. We are still trading above the moving average band. This is one thing that you need to care about. As you can see, we need to break below this band in order to give some kind of strength to other currencies, the euro, the yen, and so on. And as you can see, the rising trend line from the low seen early this month is a little bit below this moving average band. The bottom of this moving average band, as you can see, is at 98.13. Now the rising trend line is almost exactly at the 98, maybe 2 pips below that. So in this area, we also have something important that can help us understand what's going on in the market. We do have 98.45 on the upside, and let's call it 98 on the downside. So we need to see the market penetrating one of these two levels before we can pick sides in this fight. Now let's look at the hourly. And the hourly, the moving average, when it becomes this flat, it is not very useful. So having it above or below it really does not mean a lot here. We need to see some kind of slope in the moving average before we can say that this piece of information means anything at all. Currently, it does not mean anything at all. So again, we are now waiting for a break below this trend line or above the 98.45 resistance level. Now, why 98.45? What I want to take a look at is the daily chart. I don't need the indicators anymore. I have seen everything I want to see. Now, If we can say that this is indeed a 5-wave sequence, we can count these as 5 waves, then the retracements for this 5-wave sequence is very important. These retracement levels need to be calculated. It's obviously a sequence that can easily be counted as 5. It looks like just like a 5 should look, with 3 being the most obvious wave. You know, it's prominent, it's obvious, the strength is there. Now, another sign that, my God, that the dollar is going to have some bad times is that we were talking about 45, guys, remember? Now look at this number right here. The 50% level for these 5 waves going down is 98.39. 6 pips apart from this top right here and 5 pips away from this top right here, which of course is a sign of weakness. So with this wave count, with these 2 tops very close to the 50% level of what looks like a 5-wave sequence, I have zero doubt that this is bearish. So what I'm looking at right now is very, very bearish for the dollar. Of course, we still need to see a break below 98 before we get very excited about it. But as long as we do not break above this 50% level with a good number of pips, we are not going to have a strong dollar anymore. The trip to the upside for the dollar, this fine trip here, or maybe this whole attempt to recover here from November 1st bottom, again, it's trying to recover from November 18th low. In both cases, these trips can be over very, very soon, unless the dollar can break above 98.39. And obviously, up until now, it's not breaking above 98.39. That is why I am going to be bearish on the dollar index. And of course, that makes absolute sense, because if you go back to our analysis earlier today and previous sessions, we are Euro bulls, dollar yen bears, and gold bulls. So all of these 3 analyses are against the dollar. They point to dollar weakness. Now, we also have the dollar index also pointing to a probable phase of dollar weakness unless we break above 98.39. So 98.39 Fibonacci level, we have a Fibonacci level. I'm going to call it a key Fibonacci level at 98.39, and we do have recent tops, key price top, let's call them price tops, at 98.44 and 98.45, which of course shows how important this resistance area is. So resistance without a shadow of a doubt is at 98.39 to 45. Sorry about this. 98. Okay, guys, keep your eyes on this resistance on the dollar. I'm going to keep my eye on it from now on. When I come back on Monday, the first thing I'm going to do in the morning is I'm going to take a look at the dollar index chart. I'm going to see if we are above 98.45 or the area between 39 and 45, or below that. And that will help me a lot understand what is going in the market at that time. With this, guys, I think we don't have any more time because it's a short session for today. We are done. I'm glad we covered all the instruments we want to cover in time. And I want you guys to enjoy your weekend. I want you to recharge, go out and do something fun because next week we're going to work a lot. This week, the market did not move much. We didn't have a large number of triggered signals. We issued signals every day, but not all of them were triggered. The vast majority of them were only orders, which were canceled later, probably because of the Thanksgiving and you know, the market is not feeling like it's working a lot this week. No, traders, maybe they are thinking about the holiday more than thinking about the market. But next week, I don't think that will be the case. So next week, maybe we're going to get some exciting moves, the kind of exciting moves we were waiting for. It was postponed till after Thanksgiving. This is what the market is telling us. So next week, we're going to do everything we can to get you guys some good profit. I want to make some good profit for you next week, and I want to do that with you guys with me on Monday. So let's meet on Monday again for yet another adventure, another attempt to make money with trading the Forex market. So guys, enjoy your weekend. Have a great weekend with the family, with friends, but don't think about the market. Don't overwork yourself. Don't work on Sunday or Saturday. I know a lot of people are looking at the charts even on Saturday and Sunday. You don't have to do that. You need to enjoy your time to recharge, because next week we're going to have a lot of work, and I want you to be relaxed. I want you to be in a good mood so you can enjoy working just like you enjoyed your weekend. Okay, guys? As I always sign off, good trading and good luck. And the last thing I want to talk about for today is a big, huge thank you to QTime FX for sponsoring this live webinar. Guys, QTime FX wants you to make money. They want you to be successful in this market. They want you to enjoy trading. They want you to withdraw profit. That's why they are having an experienced trader with 19 years of experience telling you what he thinks about the market. A chartered market technician with 19 years of experience, just here to help you spot the best opportunities in the market. That is, of course, sponsored by QTime FX for one reason only. They want you to be successful, guys. They want you to make money. They want you to make profit. They want you to enjoy trading. And these webinars are only a part of what they are doing in order to make that easy for you. Just look at these spreads, guys. QTime FX offers you fantastic spreads to trade with, and with zero commission. So you can trade the euro dollar, the dollar yen with less than half a pip in spread, and other instruments, other majors with similar spreads as well, and with zero commission. This is the best part, because if we give you fantastic spreads, then we charge you commission, then what is the use? But no. QTime FX are doing this to make it easy for you to trade. They don't want to charge you commission. They want you to be successful, and they are offering you fantastic spreads. And to make you feel safe about your funds, they are segregated in UOB, which is ranked in the 22nd place in the World Bank ranking. That's something, guys. The 22nd place, not in a region, not in a continent, but in the whole world, in the World Bank ranking. That is absolutely fantastic. And to top that, guys, we have this promotion that everybody is talking about right now. We are offering you the chance to get yourself $500 in free bonus. Did you hear that, guys? $500. Real American dollars. Not trading credit, not just a number in your account, but real American dollars. And to do that, of course, you have to open an account, deposit in the account, and you will get your bonus. But you need to contact us at FX_educast via Telegram in order to get this promotion. So don't go there, don't go here, don't go right, don't go left. Go immediately to your Telegram and send us a message, FX_educast. Again, FX_educast via Telegram, and we will get you this promotion. You can make a deposit of $150 and you will get a bonus of $250. Or make a deposit of $300 and get that fat $500 bonus. You can withdraw equity equal to $1.50 per lot traded. Of course, you need to trade in order to get this bonus. So guys, head to your Telegram, contact FX_Educast, and let them know that you love these webinars. Let them know that you love QTime FX. Let them know that you want to open your account with us and you want the bonus. And you will find the most friendly, the most professional team in the world ready to help you. FX_Educast via Telegram, and we will open that account for you with QTime FX and get you that $500 bonus with big smiles on our faces. So guys, good luck. Enjoy your weekend. Good luck with the rest of the day if you are still trading, and see you again on Monday. Bye-bye.